Hi, good day to you. First of all, I wish you well and your family. I created this video. The title of this one is Save Your Home from Foreclosure, Restructure Loan. At these trying times, the pandemic has really wreaked havoc to many lives in the world, resulting in job loss, businesses closed, not to mention the other ill effects of the pandemic like the health issues, emotional issues, physical and mental issues. Uh, Maybe you're one of those who got affected with this pandemic, uh, which resulted in your reduced income if you did not lose really your income or your total family income uh, because of your expenditures. You could no longer afford to repay your mortgage loan. And I'm here to provide guidance on unsolicited, you may take it, uh, on how you can save your home by talking to your bank, talking to your loan officer on loan restructuring. So, what you must first understand is that loan restructuring is a new contract that you will write with your bank with new terms and conditions. And that new terms and conditions should be able to help you repay your debts or repay your monthly amortization. So, if you already have defaulted from your loan for several months and you will continue to default on your next amortizations, most likely the bank will move into foreclosure property and evict you from home, from your house. That will be the saddest thing that will happen to you. But if you can save your home from foreclosure and you still have some money to pay your bank, maybe not the same monthly amortization that you want to pay your bank because you cannot afford it, then maybe this advice could help you fix things or think about on what will be your terms and conditions that you can negotiate with your bank. So to understand how mortgage loan restructuring works, it's basically quite simple. Uh, your you still have to pay the remaining balance of your loan, and then the other charges that are part of it because you were not able to pay your debts, and also some other fees that you may need to settle. And all those amounts are the total amount that will be restructured by your bank. And depending on the rate or the tenor of your loan, they will come up with a new payment scheme or new amortization that you will need to pay. And if such amount you can afford, then that's good for you. Maybe you can say to your bank that you can only afford this much money to pay the bank in a month or every month. Then your loan officer can design that package or terms and conditions for you to save your property. So what you're seeing from your screen is a sample of a loan uh, that was granted in 2012 in the amount of 175,000, and this was charged 5.25%, 15 years. And this is the monthly amortization. So say this is your loan, and as I mentioned, your family income reduced. You could not afford this anymore. So that loan will mature by 2027, and it's just less than 7 years, and this loan will be finished. Unfortunately, you cannot do that because you cannot pay anymore this amount of money plus those missed payments that you made. So if we will take a look at how many missed payments you made, those amounts of payment you need to update in order for the bank to hold the foreclosure of your property. It depends on their policy whether how many missed payments you are entitled to before they move in to evict you from your house. So let's say that this is the package that you got from your bank, and this is the time that you defaulted from May, June, July, August, and these are the amount of missed payments that did not happen to be paid by you. So this is what you call the default, and then there will be a next due by this coming September. Naturally, we still default from this due date. So what you can do is you approach your bank, know your remaining loan balance. In this example, after paying like for more than 8 years, uh, the remaining balance of this is 97,000, which was taken from here, which was your last payment date. So look at your loan amortization schedule. If you have a copy of that one, you will see there how much was your loan balance, which was the last payment of amortization you made. Okay, so that remaining loan balance is the amount that will be restructured by your bank. And apart from this balance, you may need to settle the accrued interest or the unpaid interest, which are actually the from the time that you made your last payment up to the time that your loan may get restructured. Say, for example, your loan will be get restructured on this date, next September 12th, can be September 15th. It depends on you on when you want your loan to get restructured, and this accrued interest or unpaid interest will be computed. So this is just simply the interest on your remaining loan balance on your last payment date, and then times the number of days that from date of your last payment up to your loan restructuring date, which is in this case 153 days, and then the interest rate on your loan. So that's the amount that will be added to your uh, restructuring balance. And the bank also charges penalties on missed payments. And since this, say for example, this is the uh, calculation of your penalties, that amount will all be added to your remaining loan balance. So uh, read your contract and see how the bank computes for the penalties on your missed payments. So in this example, the penalties charge is 5% per missed amortization all throughout. So you had 4 missed amortization in this example, and this is the amount of penalty that you need to pay. And the bank may also charge you other things like processing fees, legal fees, if they already have referred this to their counsel or their law firm. Uh, and I hope that it's not yet, because some legal fees are really very expensive. Taxes, this pertains to the restructuring of your loan, wherein a new contract will be signed, and uh, depending on your country, if they have what you call documentary stamp tax, this may be levied on you. In some countries, the central banks of some countries during these times set a rule that you cannot impose documentary stamp tax when the loan is structured, because they understand the effects of the pandemic into the lives of the people. That's sort of a reprieve. So check it out, and if there will be taxes, you will need to pay this. And other charges, what could be the other charges that may be added into the restructuring loan amount? This could be insurances that you also fail to pay, like the fire insurance, the uh, credit life insurance, or your mortgage redemption insurance, which some banks are requiring for a mortgage loan borrower. So you add all these fees together plus your remaining loan balance, that will be your restructured loan amount. And normally, during restructuring, a bank would assess whether you can still really repay your debts and may require you to make any payment. And say you still have savings and you have want to show good faith that you will be good in restructuring your loan, and say you would want to pay $3,000 for your missed amortizations, and the rest you want them to add it into your new loan, then that is good. The officer may think about, that you can really still repay your loan, and you're a good person that you don't want to really uh, lose your home or your family. So if you will total this remaining loan balance and all these charges, let's say this is the total amount that will be restructured. You now have to ask yourself that this loan amount, as you can see here, is more. You still have to. It's more than your remaining loan balance. You have to ask yourself, how much can I pay each month? If I cannot pay 1,406.79, how much can I pay? Say for example, you can pay monthly next time like $800. Your loan officer may take a look at what will be the new terms and conditions that may be imposed on your loan. So this number was taken from this number, which is the total amount for restructuring. So say the interest rate that will be charged to you for your loan restructuring is the same, and you can negotiate if for a lower interest rate because really hard time, and if your bank is good enough to give you a low interest rate, then that's good for you. But the bank will not charge you a 0% interest rate. If they do, they could have been subsidizing or they avail of some subsidy program by their governments. Uh, what I'm saying here is the bank really has to charge an interest rate on your restructured loan. This is because that the bank also is like a borrower. They just borrow money to lend to you, so they cannot charge you more than or less than their borrowing rate. So let's say, for example, that previously you were charged 5.25%, so the bank reduced your interest rate to 5%. So the number of years that you will pay your loan will be dependent on, as I mentioned, how much you can afford. Say, for example, that your loan officer says, can you afford 10 years? And you will pay 1,096. And your loan officer, you said, no, I can only afford $800. So the loan officer may just play around with these numbers. Let's say this 15 years or going back to your original loan there. And yeah, that will be the probable new terms and conditions on your loan contract. You will be charged 5% for 15 years. And it's quite painful because you only have to finish your loan, supposed to be in less than 7 years. Now you go back to your original loan, 10 or 15 years. But it's still good because you save your home from foreclosure. You don't miss any more payments, and you may continue to do this. Maybe after several periods of time, like after 12 months, you already have recovered. You can go back to your bank and say, Okay, please restructure my loan again. I know that I paid for 1 year, therefore my remaining term is 14 years. Can you please do it wherein I can now pay more than $800 per month, and I can pay $1,200 per month. So what could be my remaining number of years? So let's take a look here. If that will be, say, 10 years, 8 years, maybe 9 years. Okay. Oh, that will be, from remaining 14 years, you can reduce your loan, your tenor to 9 years, and you can get back on track. So each time that you think that you can afford a higher monthly amortization, that will speed up the reduction of your that will speed up your payment, and you will finish your loan earlier. So right now, in your situation, for example, that you can only afford $800, then your new loan will have a term of 15 years. So it's bad and good. Bad because you will need to pay for your loan for 15 years again, when it should be finished by less than 7 years. Good because your bank will not foreclose your property, because you can now repay your loan on a regular basis. And you pray to God now that, after all this, things will improve, and you can go back on track. You can go back to your bank and say, I want to speed up the repayment of my loan. Please restructure my loan again. Your loan officer should be able to provide you this. Now, some questions that you may ask: Can, since this pandemic, does the bank waive the old charges, and I will only need to pay my remaining loan balance? Uh, I would say that the bank may waive the charges on your missed payments. If not waived, they may discount this amount. Processing fee, they may waive or discount. The legal fees also. The taxes, you can. If there will be tax that will be imposed, the government will collect this from the bank, and this will be charged to you. And then for the other expenditures that are necessary, for example, insurance, you may need to repay to really pay this. So what the things that, or the items here that can be negotiated for waiver or reduction, are the penalties, processing fees, legal fees, and others that the bank will not spend money on. Okay, so I hope this video helps you. And if you want a copy of this Excel file, how this was done, because everything here is formula, so you can play around with the numbers there, also here and here. I'm willing to give this to you. You understand. You play around with the figures that are in here. I will send this Excel file to you. Just send me your email, or you can email me. My email address is written in the description below. And if you have other questions about loan restructuring, or about mortgage loan, or about the terms and conditions of your loan, and you don't understand, just shoot me an email, and I hope I could help you with that one. In my own small way, I would like to help as much possible people who are having troubles with their mortgage loan because of this pandemic. Uh, and I will try to respond as soon as I can with your questions, or queries. And if you want me to do your uh, templates for your issues, I will do that and send it to you. Okay. I hope this helps. Uh, don't feel bad. I know it's difficult to say that, but there's hope. There are ways on how to save your home from getting foreclosed by the bank. Stay safe and stay safe to your family and loved ones as well.